Hi, I'm Scott Olson, co-founder of LTCshop.com and author of Long-Term Care Insurance Now. Every week, I receive calls and emails from people who want to buy long-term care insurance. I ask them, what prompted you to look into long-term care insurance? One of the most common answers I hear is, my aunt had a policy and it helped her get great care for the last several years of her life. Or, my father needed care and we wouldn't have been able to keep him at home if it wasn't for his long-term care insurance policy. Every year, hundreds of thousands of people receive benefits from their long-term care insurance policies. And their loved ones see how effective the policies are, and they want to buy a policy too. Now, many people do not know that long-term care insurance claims data is public information. According to the NAIC Long-Term Care Experience Report, as of 2023, the long-term care insurance industry has incurred over $224 billion in long-term care insurance claims to over 1.7 million policyholders. Now, I'm going to say that again because these are big numbers. $224 billion in long-term care insurance claims to over 1.7 million policyholders. Just go to the NAIC Long-Term Care Insurance Experience Report, go to page 6. There's 2 columns, incurred claims and number of claims open. Look at the total inception to date rows under individual and group policies, and you'll see those figures that I just quoted you. Now, contrary to what you'll often read on the internet, for modern long-term care insurance policies, especially those purchased since 1997, it is difficult for an insurance company to deny a long-term care insurance claim. Every long-term care insurance policy that meets the federal guidelines has an incontestability clause. According to that clause, an insurer has limited rights to deny a claim or rescind a long-term care insurance policy. There are 3 parts to the clause, depending upon how long the policy has been in effect. Number 1, suppose the policy has been in effect for 6 months or less. It's a brand new policy. In that case, the insurance company only needs to show that the applicant, the insured, misrepresented a material fact, a fact that would have caused the application to be declined. In other words, if the applicant had a health issue not disclosed on the application, but otherwise would have caused the application to be declined, then the claim can be denied and the policy rescinded. Number 2, suppose the policy has been in effect for at least 6 months, but less than 2 years. In that case, the insurance company must show that the insured misrepresented a fact that was material to the policy being issued, and that same fact is related to the medical condition causing the need for care. Lastly, number 3, once a policy has been in effect for 2 years or more, it is not contestable upon the grounds of misrepresentation alone. The policy may be contested only upon showing that the insured knowingly and intentionally misrepresented relative facts related to the insured's health. I know that's really technical, but you can read it in the NAIC Long-Term Care Insurance Model Act, Section 7, Part C. In addition to reading about this in the Long-Term Care Insurance Model Act, you can read about it in any modern long-term care insurance policy. To learn more and to get a quote, go to my website, ltcshop.com, and click on Policy Finder. Answer a few quick questions, and within 1 business day, we'll send you the details. Thanks.